The probability of a turnaround for different instruments. I think you're going to like this one. I don't think the results are going to surprise you, Mr. Batista, but I think you're going to like this. Strangles are prone to very large P&L swings throughout the duration. But how likely is it for a strangle P&L to flip after incurring a certain amount of loss? So let's just determine the probability of a turnaround after reaching a loss threshold for 45 days to expiration 16 delta SPY strangles. The probability of a turnaround is defined as the probability that a strangle P&L become positive prior to 21 DTE after incurring a loss of X% of the initial credit. So you get the premise here, right?
Yes.
You put a strangle on, you're down something. Goes bad. What are the chances that it comes back?
Got it. I don't know the answer. I'm going to say,
no.
I mean, it's hard to, they'll quantify what percentage.
Yeah, it depends on the amount of the loss, obviously.
Right.
If you have a huge loss, you're probably not going to come back. If you have a small loss, you probably are going to come back. That's what I'm guessing. But let's take a look. First, a note, an example of what we mean by a loss, of what we mean. After a loss of 10% of the initial credit, the probability of a turnaround is roughly 79%. This does not mean these trades will necessarily be profitable 79% of the time, because the P&L sign may flip again, before or after 21 DTs. But if you're only down 10%, it's about an 80% chance it's going to come back and at some point be positive. That's good to know. Let's go. And 10% just means if you sell something at $5, you're down 50 cents, right? That's it.
Sure.
It's not that big.
Right.
Let's go next slide. So we looked at a bunch of different stocks. We looked at 6 different underlyings: SPYs, Qs, Gold, Amazon, Apple, and Google. 14 years worth of research. This is a massive study. 16 delta strangles, 45 days to expiration, looked at prior to 21 DT. For each instrument, we determined the probability that a strangle has a P&L less than 50% initial credit, has a P&L turnaround after incurring the loss. Let's go to the next slide. When I say less than, I meant a P&L of down 50% of the initial credit. So if you sold something for $5, you're down $2.50. Okay, that's more of a real loss. When a strangle has a small negative P&L between 10 and 20% initial credit, the probability of flipping and becoming positive prior to the 21 days is very high, upwards of 69%. Let's call it 70%. So it is very reasonable that if you sell something for, let's just say you sell something for $4, just as an example, because that's probably more closer to an average sale. $4, you sell a $4 strangle. Your chances of being down 40 to 80 cents and then coming back to profitability is almost 70%.
So chillax.
Let's go next slide.
Sure.
Yeah, it's fine. Let's go next slide. As the strangle loss becomes larger, the probability of a turnaround decreases. I think that makes sense to everybody. Sure. A P&L turnaround becomes unlikely with a probability under 50% if the contract loss exceeds roughly 50% of the initial credit. So this now gets all of a sudden very interesting. So you start out with a small loss, the chances of coming back are very good. You get a big loss, you sell something for $4, you're down $2. So now it's trading for $6, right? The chances of coming back is less than 50%.
No bueno.
Yeah, well,
you got to do something.
Still, yeah, of course. But just pointing it out, your chances of coming back are less than 50%. Let's go next slide. So with a 16 delta strangle, 45 days to expiration, prior to 21 days, the probability of having a loss larger than 50%. In the SPY, it's 24%. In the Qs, it's 30. Google, 32. Gold, 34. Amazon, 34. And Apple, 38. That's just the last 14 years worth of research. So that gives you some context. On top of yesterday's context, which we talked about dollars at risk, which is super interesting. Today, this gives you some context about, hey, if I sold a 16 delta strangle, what is the probability of having a loss bigger than 50% of whatever I sold? And the answer is it's wrapped around one third of the time. In the SPY, it's 1/4 of the time. So strangles with volatile underlines. Go ahead. What?
So that doesn't change anything in my thinking. No,
I'm not. I don't think it will.
Right.
Strangles
quantify what my risk is going to be.
Yeah. Strangles with more volatile underlines tend to have greater profit potential, but they also tend to have more volatile strangle P&Ls, and they are more likely to have a negative P&L swing larger than 50% initial credit. So the SPY is about 25%, and the other ones are about, let's call it a third. Okay, let's go to the next slide. So in this one here, we looked at the probability of a turnaround after a loss larger than 50%. And in the SPY, you get about a 50% chance of a turnaround. Qs and Google 47, the other one's all in the 40s. So it's not impossible at all. You're going to get 4 out of 10 times these things are going to turn around. So you sell something for $4, it goes to $6. 4 out of 10 times it's going to turn around.
And that's if you do nothing, right?
This is if you do nothing.
Okay.
This is if you do absolutely nothing.
It'd be interesting to see what it would be like if you roll down and you reduce your delta by 50%, what it would be. I have to imagine that I guess it'll be volatility related too. I don't know, it would be nice to see. Maybe we can have a piggyback on this one. Maybe the research team could do something with that too.
Yeah. So I thought those numbers were good. Really interesting. It's less than 50%. So takeaways. A 16 delta strangle with a small negative P&L has a high chance, almost 70% in the case of SPY, of turning around. However, if the loss exceeds 50% of the initial credit, the recovery chances drop to below 50. Strangles on more volatile underlyings offer greater profit potential, but are prone to higher, less recoverable negative P&L swings, warranting conservative loss tolerances. I don't think you can adjust your loss tolerance as easy as you can be more aggressive with your adjustments.
Yeah, your delta tolerance. That's where you should be looking at, right?
Yeah.
Yep.
Exactly.
Totally agree.